Are you looking to purchase a home with just 3.5% towards a down payment and a FICO score as low as 580? Well, tune in. An FHA loan might just be the right product for you. So let's say we fall actually below that, below the minimum requirement for an FHA loan. What do I do next? Well, if your FICO score falls at a 579, 578, right, or lower, and you have 10% for a down payment, you still might be eligible for an FHA loan. So instead of going through the traditional requirements, right, those that are meeting those minimum requirements, and going through standard underwriting, what we do is called a manual underwrite. So basically we're taking a full assessment in regard to the risk on the file, and we're having it go through a secondary review. So not only does one underwriter take a look at the file, but two underwriters will actually take a look at the file in order for us to issue approval. So it's not impossible if your FICOs do fall below that 580 minimum. Just know that we are going to take a really thorough look at the file to make sure that it is eligible. So who could qualify for an FHA loan? Well, there is this huge misconception that it has to be a first-time home buyer. Those are the only people that can qualify for an FHA loan, and that's just not true. Even if you've used an FHA loan in the past, you still could be eligible for an FHA loan present day. Or even if you've had anything derogatory happen in the past when it comes towards credit, maybe a late payment, maybe a collection account, or you've had that 2-year seasoning on a bankruptcy, you could still be eligible for an FHA loan. And that's where it's going to get really important for you to pair with a loan officer in order for us to determine your eligibility. So this video is not going to be a tell-all, for every situation. Hey, I have had a lot of buyers. Hey, I meet the requirement. I have a 580. Hey, I meet the requirement. I have a 3.5% down payment. I'm going to be eligible for a loan. That might not be the case every single time. So that's when it is going to be crucial for you to partner with a professional in order for us to take a thorough look at your credit situation, your job history. We're going to ask you for all of your documentation, right? Your pay stubs, your W-2s, your bank statements, a copy of your ID, right? These are going to be very crucial in order for us to do our upfront assessment to really determine your eligibility on an FHA loan. There are some buyers that are deterred from using an FHA loan because they say, hey, I don't want to be bothered paying that mortgage insurance. So what's a mortgage insurance? Well, mortgage insurance, it generally is going to be paid monthly, and it does protect the lender in the event that the borrower does not make timely payments on the mortgage, right? So on an FHA loan, we're paying two types of mortgage insurance. One is going to be monthly. So generally, if you're putting 3.5% towards a down payment, it's going to be 0.55% of your loan amount. Right. And in addition to that, you're actually required to pay what's called upfront mortgage insurance premium. So for example, let's say you're purchasing a home for $400,000, right? 3.5% of $400,000, that'd be $14,000 towards a down payment. That means that your base loan amount would be $386,000, right? The upfront mortgage insurance, that 1.75% is going to be added to that base loan amount. So in this case, the upfront mortgage insurance premium would be $6,755. So what are you truly financing with that lender? It's not going to be that $386,000. It's what it truly is going to be after we add in that upfront mortgage insurance premium. It's going to be that $392,753. So that mortgage insurance would be added on to the loan, right? Whether you're putting 3.5%, 5%, 10% down, 20% down payment, you're required to pay that mortgage insurance. So Kristina, what about that monthly mortgage insurance? How long does it take for that to fall off? Well, if you're putting just 3.5% towards a down payment, you're required to pay that mortgage insurance throughout the life of the loan, all 30 years, right? But in the event that you do have that 10% down payment like we discussed earlier, then that mortgage insurance is only required to be on the loan for 11 years. So that's something to consider. Well, Kristina, I'm just going to wait until I have that 20% down payment and then I don't have to worry about mortgage insurance, right? Well, you are correct, right? If we're going to do a conventional loan with 20% down payment, then you're not required to have any mortgage insurance. But you do have to look at cost here, right? So the average homeowner doesn't have the 20% towards the down payment. So is it going to be worthwhile for you to wait to have 20% down payment, or does it make sense right now? And is it still affordable? That's really what I hone in on, is my home buyers affordability. You tell me, hey, I'm comfortable paying this specific mortgage payment, Kristina. How much house can that actually afford me? And we scale back the numbers working that way. So that way we don't ever max you out on your affordability, because that's not what I want to do. I don't want to put you in a position to where inevitably you will default on your mortgage. That's the last thing that we want to do. So we want to make sure that we're really looking into a few things. Your comfortability for your mortgage payment, that's one, but also the lender's taking a look at some of these things behind the scenes, right? We're taking a look at your debt to income ratio. What's my debt to income ratio? Well, your debt to income ratio is going to be a combination of how much income are you actually bringing in versus your monthly debts as reported on credit and your mortgage payment. That's going to give us a ratio. And on an FHA loan, our debt to income ratios are a lot higher than a lot of our other products, especially in comparison on a conventional loan. So that's why people are able to get an FHA loan, and maybe our buying power is just a little bit more because our tolerance on that debt to income ratio are a lot higher when we're looking at an FHA loan.